learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watchlist coming in on March 24, 2020, and the stock market changed forever today. Why do I say that? Because we saw more action from the Fed. That's what brought us up in pre-market, but then we came right back down. But what you could see this reflected in the most was one TLT, but more importantly, gold and GLD. This was the first day that we actually saw a bigger down day with the market and then finally a big pop from gold, because if you've been watching along, a lot of people have been confused by that. Gold was selling off with it. So it is very, very interesting what happened today. We have a lot of stuff to talk about. There are some updates with the stimulus. Even as I'm making this video, you're going to hear more updates from the virus task force. So we'll see what they bring up. But all in all, though, we have to keep watching and how we play our moves moving forward. The market's going to get a little bit confusing, and that's what some of these signals today told us. So I'm going to go over that, what happened in the market, some of the main events, and then also some of the main events we are looking for this week. We have a few different economic reports coming out from a bunch of other countries. The currencies are still at an important spot. We're going to talk about those, but as that starts to come out this week, we got to see where we end up, and I made a lot of plays, so I did go into TLT. Again, we're going to talk about that, as well as I took a lot of profits today on a various amount of plays, and I even had to change up a little bit of what I was expecting coming into tomorrow, or even from yesterday. So I got that for you. I got the keys. I got the plays and everything else we need to do. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. Costs you nothing. It's free 99. You could ask the questions. You could watch the plays. You could socialize. You could learn something. All we ask is that you're positive and respectful. That's it. So youtube.com/thestockmarket. We better see you there. And some people said they had issues this morning finding the stream. They were DMing me, emailing me, Josh, are you okay? We are always on, so I appreciate you guys who are concerned. If you didn't show up, make sure you go to the channel during market hours, youtube.com/thestockmarket. You should see the live box there. And the most important thing you need to do, post your watches below. Let us know what you're looking at. You got any plays, comments, remixes? We need to source that information. So shout out to everybody on the stream and the people sourcing the information. We got a lot going on. I appreciate all of you. So thank you guys. And yes, let us get into it. As far as the keys for tomorrow, this is what happened today. This is what caused that pre-market move. The Fed pretty much announced unlimited QE. I don't know how they did it. I think they got approval from Congress, but how the Fed is acting quick. And the key is we saw them act on Friday. We saw the primary dealer facility. We saw at the beginning of last week a second emergency rate cut. I mean, to see them step in again, that is very, very important. But now what you need to see is the time from any of this policy. It's one, they're talking about it today, but it's going to take time. The primary dealers took a few days, even if they want to put bonds, even if they want to do, this is what we talked about a lot on stream. They're trying to do any sort of bailout, anything of that nature. It is going to take time for literal approval of stimulus plan to then lead to a check in someone's bank account, which therefore would create money in the system, and that would ease some of this dollar liquidity. But that's when it gets announced. So that's the same thing here with the Fed. They're saying stuff, but then you need to wait for it to be implemented, as well as now this is the main point, and this is what's changed a lot of things. It's how it's been interpreted. So this is going to have an impact on bonds and gold, but this is important for that reason, because now, as they said that today, the markets reacted positively at first, but the fact that it sold off and the fact that it led to gold moving and then bond yields going down, which made TLT go up, this is showing now that gold is the biggest indicator, because this is happening faster than it should have. But essentially, once you get an announcement like that, this is what gold and bonds will reflect is lack of faith now in the credibility of the Fed or just anything in general. This is now where you start people seeing them really flock to the safe havens, because now how you interpret it, even though the Fed is saying they're going to support the market really in the short term, that means something is happening. And the fact that they're all piling in now, the real big thing is that I'm looking for to see if this switch was hit. That's pretty much going to now send gold rocketing up, regardless of what the market does. And now maybe gold could even be leading and the market bounces up with it. But if the market keeps going down and we see gold rip, based on today, the fact that they are issuing so much money and that they're saying they're going to all these extreme lengths, when you see gold catch a bid like that off of this news and in this kind of climate, that is the biggest thing. So that is the main thing I'm going to be looking for, and that is going to be important. And I guess another thing would be even, how we dropped, and then as the vote failed today, we were waiting, the market dropped, we kind of didn't do much as we were expecting the vote, and we talked about this yesterday. The number one thing people are looking for, or a lot of people are looking for, and now you get to see, this is why today was very, very weird. A lot of different factors in the market, but they're waiting for the stimulus, because once that stimulus comes through, like I said, Wall Street is going to be worried about if this turns into a political battle, and sadly, that is kind of what it's looking like now. They're trying to, both sides, one side wants to get less restrictions, the other side is trying to get more restrictions or go after other industries with stuff, so it is a very unique position. However, if that doesn't get resolved quickly, I mean, this is the next black swan, I would say, would be that if this political stalemate, they said maybe we're going to see till Friday, if it extends past Friday, the next thing you got to worry about is credit ratings and the credit agencies. But we got some sort of affirmation from them last week with what they said about the Fed. So we'll see. But the politics of this situation could really hamper a lot of this. And that's what people are worried about. But the Fed caused the first move today, then kind of sold off waiting for that vote with the stimulus package. And then that caused the second one. And then after hours was weird. And today, we also had the first day of trading, so that was a little bit weird today. It was much more weirder at close. The open, it was surprisingly pretty normal. The only thing we noticed about the full electronic trading, sometimes I made orders at the ask or above the ask and I wouldn't get filled, so liquidity is naturally lower. However, volume was still relatively high today on the market. It was actually very, very weird. But moving forward with the keys, the next thing you got to look for, this is why it's an interesting time. It's even interesting with what I did with my options, because there's a big risk to reward here right now, because what's going to happen, we've approached 2015, 2016. Essentially, all of the gains now since Trump's election are wiped out, but now this is where the next phase gets entered. You come back down now, you gave up 5 years of gains. It's either we're going to go lower than the 2016, 2015 highs and take us to this other danger zone where last time we had the last oil crisis, and that would make sense considering we're just pretty much going and following oil back down to these levels, and then this could mean something. But essentially now, this is where people really start losing money. Like our long term, we started that at the end of the year. We're down on our long terms that we started, but now people who bought in 2015, 2016, or let alone the gains since Trump's election, now people could really start losing money on portfolios. You are going to get a different psychology coming in, and this is going to be that next phase with pricing. And now, this is where I get a little bit worried with a few things. Oh man, I had it on this chart for you guys. I wasn't showing you. So this is what I was saying with the difference. There's 2016, and then again, the election of Trump and all that. So once we start hitting this level, that's a new regime change. And in the last 5 years, this is the biggest low. So that's important to note. But watch out for that. Watch out now even for bonds and gold. Like we said, that's going to be something, one of the main points I'm going to be looking at, and just the fact that they acted normal. But really, really watch out for gold to see if that switch has actually been flipped, because if it does, I mean, we're still in that play and we'll see. And now even back to some of the other stuff I was saying with entering this next phase with pricing, this is why I took a lot of the value. I still believe in the UUP play, and just even again the trifecta, bonds, gold, the dollar, and what's going on. So I figured, if we're entering in a new regime with pricing and it's going to enter new levels on the SPY and we're at a critical point, and then not to mention the fact that the Fed is unleashing all of these bullets, I said, well, I want to make sure I walk away with a good amount of cash, because the amount of cash we have today might represent something different here in the future, but same goes for prices. So that's why even then I did take some longer term plays, and I got that on the same logic, because they may seem expensive now that may be cheaper in the next few months, or vice versa. So it's either my dollars are going to get me a lot more puts, or my dollars now will be able to get me a lot more, because if I think they're expensive now and they're really not, that will tell something. But that's a little bit more advanced. I'm going to talk about this a little bit more as it becomes even more clear for me. So keep watching, stay tuned. But lastly, the end of this week and coming in, it's going to be happening, I think, tomorrow, the next day, all the way through Friday. You're going to get housing data, new home sales. We're also going to get Euro manufacturing numbers, PMI, PPI, all that sort of stuff. And then we're going to get the first jobless claims from the U.S. So I don't know if this is going to be where we're still 6 weeks weeks behind and the data really won't reflect. So that has the potential to be bad. But if that starts to print some of those crazy bad numbers that you've been seeing from Fed Bullard and Mnuchin, that would be very, very scary and people could react to that. So that's what we're going to look for. But that's pretty much it. It is going to be crazy. The fact of what you saw with gold today and bonds and some of this stuff normalizing and now seeing stuff even like the dollar and everything else go crazy. It is wild, and the market is definitely changed, not to even mention we're all electronic now. So keep your head out in the game. Be smart. Now we will talk about some of the plays. I did take a lot of profit, but there's a lot of opportunity, and there's a lot of room to walk away with profit as well, too. So the key moving forward here is being patient and responding. So let us get into the plays. So right off the bat, we will come back here. I made a TLT play, so I think I'll start with this. Again, you guys see it on screen. Do not trade anything here. I'm doing this to document the trades that I made, that I have been doing. So please do not copy these or trade these as recommendations, anything like that. Option trading, you can lose almost your financial no personally. Thank you. Have a wonderful day. And you see it there on screen. But I got this. I talked about it yesterday. I even said this yesterday on the watch list. I said now might be the time for TLT. I hesitated. I wrote up the other TLTs, and that's what I'm holding. And now I did take a lot of plays. So even I'll talk about that, and that's what helped me justify this TLT play. But like I said, there was a lot of other profit that I took. So I will go over all of the other accounts. One thing we'll talk about is this Tasty. It had to do with the first position I closed today. My key here today was making sure we got the cash balances. So now you see here I covered any sort of premium sales. That's why my buying power here is at $60,000. I have $60,336 in cash. I cannot go anything below that trade. And then same thing here with this Robinhood. On the second one, you see here I have $97,000 in cash, and that's what we wanted to do. I wanted to sell out positions. So you can see here I'm limited on the amount of positions I have now. I'm still holding the big TLT for June. I've not ghetto spreaded that. I still have the EEM. We sold 40 out of 50, so I'm holding those last 10, and then everything else is either, it's dead or we ghetto spreaded it. And then I got that other Tesla, and then here are some, what's it called? I tried to get some of the USOs today. I wasn't getting filled, and that was part of the issues I noticed, so I got halfway filled on some of those. But as far as the main positions, I'm still holding that. Even then, I'm still holding the GLD. We still have that full position, and then lastly, the UUP. We're up 62%. I'm holding all of that. So I still took a lot of profit. And this is what I was saying. I had so much on the table. We're at this point. The reason why I put up a lot of these options, I said, you're at a crucial breaking point right now because so much time is decayed. The options held up. Whatever move we make here now, premiums are either going to get crushed and become very, very affordable, or that is going to be their base, the new second level, and then they're going to take off from there. So what I wanted to do was still be in trades. I still have exposure. I have exposure to the ones I want, UUP, GLD. I got to double dip on TLT today, but I took cash, and that was the key. So what did I sell today? I covered my Apple position. So I owe you guys 25,000 push-ups total over the course of a year. I was down $25,000 on that trade. So I was able to cut that out fully, completely, close that position. I can't make or lose any money on that play anymore. So I sold that, but that changed my cash balance. So then the next thing I did, I sold that J&J April ghetto spread. Max gain is 7,000. I collected 3,000. I sold 100 of the USO puts. We bought those at 7 cents. I sold them out at 50 cents. I sold all of the UNHs, those July, sold those at 550. We bought them for like 50 cents or so, or like 80, I think. Then I sold out both sets of the IWMs. So you guys remember those. Those both had 50,000 upside on each. I pretty much got out with like 15K upside on each, or like 10 or 15, depending on where I sold out. And then some of them, one set I bought for cheaper. I got rid of all of those red fins we made earlier in the week. I got 50% gain on those. I sold all of the May Walmarts at 70 cents. That was about 200%. Then I sold all of the Baba June contracts. I got $1,000 or so from there. Sold all the CLXs at like a 50% gain. And then I made some purchases. So I was able to realize over about like $20,000 or $30,000 there. I think the net realized was about 20 as I started to put more money back. But then that led to the next TLT. So like I said, I was eyeballing the TLT and I like those. But pretty much what's happening now with TLT back at this level, it puts TLT at a very, very important spot. Not only has it dropped and then came back up, but you guys don't forget, remember the first time TLT made a move, we were amazed. And I still am amazed. The fact TLT's back up here and then it's held some strength here, but now getting it on some upside and doing it surprisingly quick when you go look at some of the other bonds, I think it's wild. But TLT could get crazy from here. Unfortunately, the June contracts went up. So remember, we're still holding these 200s. Those went up 70% on the day. So remember, look at that chart. This is what I brought up to you guys the other day. I said TLT's holding. It's going to be that make it or break it moment. So they got a little bit of a pump. Again, I could still be wrong and this could go out of there, but I did take a bigger play. So what did I go after? I went after these May contracts and I got like 230s. Yeah, we got the 230s at 75 cents and these are extremely expensive. Again, I'm still holding those May 180s. We have those ghetto spreaded. That one's just still in the Tastyworks account. So I could still make another 20,000 on that. So it's either, this play is me getting greedy. And my logic was I also sold out of the HYGs. I don't know if I mentioned that one. I forgot to mention that. I sold all of the HYGs and I got $7,000 on that one. So my logic was we exit out of the bond play. I brought up the bonds yesterday with this. So now I'm selling out of the HYG. We got $7,000. I put $1,200 back into this. So I bought 20 of these contracts at 230. They went up a little bit, but I went for some of the shorter term. I would have gone for some of the Aprils. And some of these, you could have got these ones really, really, really cheap, but they started going up a little bit. But you'll notice it'll be harder for the Aprils to come up and gain value. So the key is going to be getting time. I mean, here's what's going to happen. If TLT does go crazy a second time, that's why I wanted to get some. But if I was going to put more in an amount of money, I wanted to make sure I at least had time. But that one got negated by the fact it's so far at the money. However, short terms, if TLT starts going crazy from here, and this could be that opportunity if it starts getting past here, and then especially with what the Fed's doing, if everything normalizes, the short terms will go really, really crazy if TLT starts moving back big levels and starts even breaking out and going crazy. But if not, the best ones are going to be the Mays. However, any far out the money contracts, if TLT starts going up, but it stops going up at a huge pace, you will lose money on all the out the monies regardless of the time frame. So be very, very careful. That's what I'm worried about with TLT. And because we're still dealing with inflated premiums from the first run up. Don't forget that. So that was the first play I made. The second play that we made on here was the Western Digitals. I got these July contracts. We got 10 of the $60 at 45 cents. So that one was $450. It wasn't too bad. But why I got WDC, I thought they had a deal. I think it was WDC and someone else, but I guess I was behind on it. But the fact was, out of many of the other companies, Apple was leading on the low side. They were up 7% when I got the play. I was like, that's not bad. I'll take it. We could cover an earning. The fact that I still have so many puts, we still took a lot of profits. I was like, it's not going to hurt to get a little bit more. I spent a lot less. Some of these other positions I've been opening have been pretty big. So I'm trying to come back to the basics here on some of these plays. So if I'm getting a small amount of time, I'm trying to get less money. If I'm getting long amount of time, I could justify a little bit more. But I spent a little bit less here, and we got these 60 contracts. We got these at 45 cents, and they really, really started to take off here. They kind of came down at close, but I like them. I want to see how they start moving. But again, as a chip maker, they're a slow mover, lower IV. But the fact I liked about it, this contract has a lot of time, but when you start seeing these calls used to be so high and the market's dropped a lot now, you're not getting the cheap put premium, but now we could start finding some cheap calls. However, a lot of the calls we bought so far have been all over the place. So we've been down 70% on like those LMTs. The 3Ms would drop 50%, come back down to down 11. So it's still difficulty even trying to buy it bounce on here, but if anything, you get more security when it comes to getting more time. So that's what I've been focusing on. And then the next play, and you could kind of see the balancing act that we're doing here. The next one was USO. So I got rid of the USO there, the puts. So what I decided to do as oil started to jump, oil didn't do much today, but there you go. See, now after hours, it's starting to rip there. That right up here. So that's good. That should benefit our plays. But the fact was, when I made that when I was late on oil, I called it around 10 or 11, and then I finally got in below $9 on USO. So I was like, well, if we were late to the put side and still made money, I'm sure we could get a lot of time here and get pretty decent on the call side. So I still was able, I was like, surprisingly, I took around $4,000 from the USO play on the put side. So I said, we'll put $800 back on the calls, and I was pretty cool with that. So I grabbed the USO July 11 calls. I got 100 of them at $8.08. I tried, that's why I tried to do it on Robinhood to limit any extra commission. So I accidentally got filled on the 1150s. I wanted those at first for 5 cents. It only filled me on 10, and then the ash jumped up to 7. So then when I saw that, I just jumped on the 11s and I went all 100 in there. So there was that. And then the next play I got was NVIDIA January 21st. I got 3 of the 65 puts at 205. Now I got this play early in the morning, and it was a little bit different considering the fact that it had more time, and I got it earlier, and my charts were even tripping out. But what I liked about it, I'm trying to test the thesis out here, and I want to make sure I have time. So I bought this one at what, 205? They started to really go up through the day, but you even see, even though as everything happened, they're kind of holding. And this is kind of alongside that thesis of what I said. Some things may be cheap, they might get expensive later. I want to start looking at these contracts with time, because you're seeing, just like looking at the TLTs with April, May, June, and understanding how different ones are going to value differently. So this is actually what I want to keep my eye on, is the longer dated contracts, and we need to see what becomes available. I want to see the prices, but I threw out a little bit, through 3 of them, $600. So again, you guys see I'm keeping these plays still bigger than I would have played a few months ago, but a lot smaller than some of the recent plays. I was throwing $2-3 grand at IWM here, different marketplace, but now I'm trying to preserve some cash here. I'm sitting on 150 cash ready to go, all profits from this last 4 or 5 weeks. But now I'm trying to move in, and I'm getting place markers. So I'm still holding a lot of calls. We still have the cash balances. I want to start seeing how the short-term contracts are. I kind of have an idea there, but then I'm also aiming for the long term. But that was pretty much as far as the plays. As far as everything else, here is what I'm holding, and that's all I'm going to be watching moving forward, is a lot of what I'm holding. And I have different ideas on every single one. The one I want to get back into, I'm still holding the UUPs, the TLT GLDs, but I even have this here on the keys. I want the UNHs back. So I sold those, and I was more in my balance the book mode. So I was trying to organize everything. But if there's one play I want back, I even said them yesterday, the fact that they didn't gain too much premium, but it's moving, I want the UNHs. So I'm going to either wait for a bounce, or we got to see what's really going to work for us. But I really, really like those. So I'm identifying the UNHs. I want to get back into those, and that I could get back into those, and maybe in the next week or two. Pretty much, I just need to exercise a lot of patience here, and that's what I'm going to try to do. But I like those UNHs a lot. Still holding the UUPs, TLTs, GLD. Then I still have that Amazon play. So pretty much this small Robinhood, and here's something funny to pay attention to. Big Robinhood, you guys see we closed up today, and that's off of 134,000. Here is the Tasty Works. It says we only closed down $422. But then we go to the small Robinhood account, and now we're at $1,400 down. So this account, this is where I have more of my just kind of the bigger YOLO. Someone said make a small account. So very, very irresponsible. You could see, hopefully this puts it in context with all the other accounts here. I'm trying to just secure the real big amounts of money, but this account, the small account, has a lot of my YOLO plays. It's pretty much all of this is consolidated into Adobe, CMG, and Amazon, and then those CAH puts they're a little bit smaller there, but I'm just holding those, so we're going to see. But I like those plays. I like the Amazon. I'm just holding those. That one covers earnings. I wanted more of the CMG, but I'm going to wait till those really, really come down. But those went up a lot. They came down a lot. This was a big bounce on CMG, but I still like that play. I'm going to wait. And then the other play, Adobe, I was going to buy more Adobe today, but the Aprils are getting cheap, but the May, June, Julys aren't, and that's the problem. So I'm still going to ride out that Adobe till we either lose more money or until the other contracts become cheaper. Watch LQD. So again, we sold out of HYG. I'm going to see, but now watch LQD. LQD has one of its best days here. It's finally bouncing. So observe how some of these different bonds play. HYG had one of the worst day, but if we start seeing bonds dislocate, LQD could be a decent one. I'm going to look at that tomorrow. I just want to see the prices. I'm still in those EEMs. We're in the money on those. I'm just still holding 10 contracts, so I'm just going to hold those, keep those pretty solid. I'm still in that booking play, and now booking might be one I'd want for the bounce. If I could get some July longer calls, you could get some crazy far out the money ones. I might want to get that to hedge with calls, but I still have that debit spread. I need to do something with that. I think that one I might want to get rid of tomorrow, but we're close to the money, which is kind of good. UUP we're still holding, and UUP I'm just going to keep playing. That's why I'm going to hold those in line with the GLD, TLT, dollar trifecta thing that we've been holding. And then finally, these are some plays I like, and I'm going to keep my eye on Starbucks, both on the put or call side. I want to see how they play because they were weak today. And then another one, McDonald's and HD, they're kind of breaking off from each other. Even now, McDonald's is trading a little bit different as a food supply company than CMG is. HD's at a crazy level. I really, really want HD, but the prices are phenomenal. I don't know why they're charging a lot, or maybe I do. I think a lot of people are expecting stuff. So keep your eye for Home Depot, though. I want some of those. I'm still holding that BLK. I like it. That play went up. And again, even banks in general, like I said, watch those. Watch JPM. I'm going to see. I don't really have too many bank plays, so I want to get set up. But we need to see the new regime of pricing. But it's going to get crazy. I hope you guys are ready. Stay focused. Stay patient. Don't be afraid to take profits. That's what we talked about. I'm at least setting a good example example for you. I've taken a lot of profits already now. We still have a lot of exposure, but there's a lot of stuff happening, and I think it's still going to get more confusing. The days have been somewhat quiet, so start expecting even some more news to roll out, and let's see what happens. Stay focused and get ready, but that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. It's free 99. I need your helmet on. You got to keep the armor shining, baby. You need to stay focused. The miracles are right in front of you. Just take it. You got to get prepared. If you recognize the opportunity today, you'll recognize the next one. If you miss the opportunity today, it's going to be harder to spot the next one. But either way, you got opportunities coming, baby. So I love you. The cult loves you. I need you ready. Helmets on. Let's go.